Welcome to this weekly market analysis. Last week it was a nice week, both fundamentally, technically. The market played out as we had analyzed. Those that watched the previous week analysis and the consecutive analysis that I made during the week, you should have benefited so much in terms of getting probable position, high probability entries. So today we begin by looking at the DXY. And from the monthly time frame, the DXY, let me delete this so that you can see what we have from the monthly time frame. So from the monthly time frame, we can say there was this area of resistance that was broken to become support. So this side is resistance, so it was broken and the market came back to retest. So around those levels, the market is coming back again to these levels. That is from the weekly time frame. So from the monthly time frame. So from the weekly time frame, again you can see this was a channel. This was a channel. Okay, this was a channel. It's a very clear channel, down channel. So from this down channel, there was the breakout from the down channel, and the market went on the upside, and now the market is coming back to retrace, to retest. Probably is coming back to these levels. So again, we can be able to identify a fresh zone. Here we have a fresh supply zone from the weekly time frame. Okay, from the weekly time frame. We go down the daily time frame. And from the daily time frame, again, you can see we have this channel, the down channel. It's expected the down channel. And what is happening right now, we have this retracement. We have this retracement. We have this downward movement. Okay. So probably, technically, I'll be expecting this DXY maybe to test the upper trend line at the down channel. All the levels that I should be expecting, again, we have a very key level around this point. Okay, we have a very key level here. So I might be expecting the price to come back all the way to around 103, the 103.45. That is on the daily time frame. So it's a downtrend because again, on the daily time frame, you can see there was the break-in structure. There was the break-in structure. So this was the previous high, meaning that this was the previous low. Okay, so this was the higher low, and this was the higher high. Okay, so we can label it just so that you can be able to understand. So this was high low. This was the high low, and then we have the higher high. Okay, this was the higher high that it's created. So we can label that as higher high. Okay, the previous higher high that is the market created, the DXY created before now resuming this downtrend. So from here, we are able to see that clearly there was the break-in structure. Okay, there was the break-in structure. So this was the break-in structure. This was the break-in structure. The candle broke. There was a break-in structure here, and now there was this retest on the upside before now the downtrend. Okay, so we can say we have a downtrend. Okay, we can say we have a downtrend. So on the 4-hour time frame, you can see again it's just the same higher high and higher low. Okay, just the same higher high and higher low that is created. And then at this level, we have a form of consolidation. So I can delete this. Ensure that you mark these areas because I'll delete so as to ensure the charts are not that dirty. So you can see there was a form of consolidation around this region. Okay, so this is a consolidation. There was a consolidation that area. And there was the breakout from the consolidation, and then there was the retest, and the market dropped all the way. Remember, we have a gap here that is not yet filled for DXY, so take note of that. But this does not mean that the gap might be filled immediately. Remember, it's not mandatory that the market will fill those gaps instantly. Okay, so we have so on the 4-hour time frame, still a downtrend. Our first target around that area, just the same as the daily time frame. Okay, so let me delete this. So our first target should be around that region 103.27. Then we target maybe that region. Okay, we target that region, and what we have here on the 4-hour time frame, again, we have a supply zone. Okay, we have a supply zone. So again, we might see the price retrace on the upside, this supply zone, before continuation to the downside. Okay, before continuation to the downside. So when you look at the 4-hour, the market has been creating lower highs and lower lows. It has been creating lower highs and lower lows. So we can see that it's a downtrend. Okay, so we anticipate the market maybe to retrace to this supply zone before dropping on the downside. Okay, before dropping on the downside. So also on the daily time frame, we have another supply. We have another supply zone here on the daily time frame. So it might respect this and then continue on the downside, or when the market opens, it might continue on the downside, then retrace back to retest this 1-hour supply. If it does not respect the 1-hour supply zone, we have the 4-hour supply zone at this level, which also coincides with the 1-hour supply zone. So there are two supply zones at the same level. So this becomes very high probability. It becomes very high probability. Okay. So having realized that, then we can look at the dollar. I can look at I can look at gold. Sorry. So with gold, basically, let me delete all these drawings so that the charts can look clean. So with gold, we begin from the monthly. And from the monthly, you can see what we have. We had this monthly demand that was retested. Okay, so the price came back to this, and there was a push up. Okay, there was a push up. So we can appreciate where the price is coming from, and we can be able to see where the price is going. Okay, we can be able to see where the price is going. So the key thing when you're analyzing the market, it's good to know where the market is coming from and where the next target is. Okay, when you look at this high here, and also when you look at this low here, we have some equal lows here. So it is high probability that these might be taken out before seeing the market take these lows out. Okay? It might take this high out before taking the lows. Okay, taking these lows here. So we can appreciate that the market is coming from this demand zone, trying to push a little bit up. So that is on the weekly. So again, you can see on the weekly, that was the monthly. So on the weekly, this is what we have. And be able to see an area of demand again on the weekly. So we have this demand weekly. So and the price price is still on this now, trying to come out of the monthly demand. Okay, trying to come out of the monthly demand. So when we go to the daily time frame, we can see on the daily time frame the market closed with a very nice doji, a very nice doji. And when you look at some other brokers, this is a pin bar. It appears as a pin bar. So other brokers are showing it as a doji. So this tells you that we might see maybe probably a down movement of prices, maybe to around this demand area, before then we see a push up, okay, before we see a push up. So we might be expecting the price at around 1963 area before we see the next push up, okay. So this is what I'm talking about. That so our target will be these highs at this level. So we have those highs around that region. So these are the targets. So on the upside, we shall be targeting the 209 level. Then if the price continues on the upper direction, we shall be targeting after that area, we shall be targeting these highs around here, the daily time frame, that is around 2022, and also maybe around this level, okay, around this level of 2049, okay, that is on the upside, Or maybe if there is more bullishness, then you might see even the price creating an all-time high, might see price creating an all-time high, okay. So that is my perspective for gold from the daily time frame. So let's look at the 4-hour time frame. So from the 4-hour time frame, you can see again we have this key region here from the 4-hour time frame. So, but again from the 4-hour time frame, we have to appreciate the support. We have a resistance here that was broken. This is an area of resistance, okay. This is an area of resistance. This resistance was broken. Remember, we said these are areas, okay. They are zones, not single prices, okay. So, and from this perspective also, we are able to see that price might come down this level probably and go up. So we have two levels to look at. We have this the daily demand. We have the daily demand here. So let me go back so that you can see it. We have this daily demand, okay, and then now we have in the 4-hour time frame we have this support. So again, we might see price maybe probably throwing a week this and then going back up, okay, then going back up, right? So ensure you mark and you keep watching those levels, okay. So from the 1-hour time frame, this is what we have from the 1-hour time frame. So we can see a trend line. Okay, you can see a very nice trend line here, and the market has been trading above that trend line, meaning still very much bullish. Still very much bullish. Okay, very much bullish. So again, we have this here, which is more of an uptrend channel. And you can see the price has been trading in between that region. So we anticipate maybe the price to come to this level and continue going up, or probably retrace to these regions before we take a buy on the upside, okay? So my directional bias is still bullish for gold. The reason why I'm saying it's still bullish for gold, it's because from the 4-hour, you can see it's an uptrend, okay? From the 4-hour, it's an uptrend. It's an uptrend from the 4-hour. So the reason I'm saying it's an uptrend from the 4-hour, let me delete this so that you can be able to see clearly. I believe you'll mark those areas as you watch the video. So this was the previous high that the price created before creating this low, okay, before creating this low point here. So this is the highest point that it created. So we are saying there is a break in structure here. Okay, there's a break in structure here. The market, there was a break in structure here, and the reason for this retracement, and then on the upside. Okay, so like I said, we shall be targeting these regions. Let me mark them clearly. These are the regions to target. So the first is around 203 level. Then we have this other the 209. Okay, we have the 209, and then the other levels you can get them from the daily time frame. The 209, we have this level here. We have this area here, which is very strong, which is a supply zone in the daily time frame, and then probably around this region 2022, and then all the way to 2050. Okay, so it's good to keep those regions marked clearly so that you can be able to appreciate how the price or the movement of the price. There is one thing that I want you to know from the 4-hour time frame. So from the 4-hour time frame, you can see this movement here is the same movement that the price is trying to print on this other side. Okay, so if I drew a vertical line along this region, okay, if I drew a vertical line here, so basically it's like you take this side and flip it on the other side, because you can see this is this, this is this, and this here is what the market is playing around this point. Okay, so let me mark clearly so that you can see, because this is a model that the market usually shows every time. You remember me saying that this was a head and shoulder pattern. Okay, so this part here is this part. Okay, this part here is this part. Okay, and this part here is what the market is doing at the moment. So you can see there is similarity. It's like they are twins. So with that in mind, what you're expecting when you see such kind of a pattern, basically you anticipate that the market has to reach all the way to this region so as to complete this pattern. Okay, this is a buy model. Okay, this is a market maker buy model. Okay, so once you see this, you anticipate that the price will definitely reach this region. So what the price is doing right now is a retracement, and with this retracement, it might probably come to around these levels. Okay, it might come to around these levels using this buy model. Then before pushing up, is our target 203, 2003. Okay, 0.99, right? So with gold, bullish. I'm bullish with gold. Very much bullish with gold. Last week we were trading these retracements, and we said that the price might go to around 1965 levels before going on the upside. So if you're still holding this retracement here, ensure that you break even. It's around those that we traded on Friday, it's around 128 pips in profit. So ensure that you break even once the market opens, and probably take partials because the ultimate direction is bullish. Okay, the ultimate direction for me for gold, it's bullish, right? We look at Euro USD. We look at Euro USD. So I'll delete. We probably can take another pair of Euro USD. So let's look at this pair of Euro USD. We begin from the monthly. So for me, Euro USD, I'm looking at it from the monthly time frame. You can see this is a very significant area. It's a very significant supply area of supply from the monthly time frame. So it has been bullish. It has been bearish from the monthly time frame. This was the bearishness, and then around this level, you can see the price is trying to create a new structure, market structure. So because you can appreciate, this was a very strong area. This was a very strong area that the market is trying to. This area was support. Now there was the breakout from this region, and the market retested, and now it's trying to go up again. But remember, now this side is resistant. But remember, we have this this monthly supply zone. Okay, so want to see how the price reacts from this zone. Probably we might see another retracement, maybe to this level, a little bit of retracement, before now resuming the uptrend. Let's see from the weekly. So from the weekly, this is what we have from the weekly. Okay, so allow me to delete this level so that my charts can look clean. I want you to see the price clearly, okay? So from these levels in the weekly, we can say we had that, okay, we have that. Also, we have the price trading in that region. Okay, so that is the downtrend channel. So the market, that is the downtrend. The trend line on the lower side, I mean, in this uptrend channel that was broken, and then the market is now coming to retest at that area again. So we might slightly see some rejection. Okay, might slightly see some rejection, and maybe to these weekly demand, then on the daily time frame, this is what we have on the daily time frame. Okay, so on the daily time frame, you can appreciate that again, this is a channel. This is an up channel on the daily time frame, and the market traded above. There was the breakout from the daily channel. There was the breakout from the daily channel. So we might be experiencing maybe some retest. We might see the price coming back to this level before now going in the upside, because I am more bullish. I'm bullish with the Euro USD. Okay, I'm bullish with Euro USD. So on the 4-hour time frame, so from on the 4-hour time frame, again the same up channel being respected. So I might anticipate. Okay, I might anticipate the price either to reach these levels, price to come down and reach maybe these levels, or probably retest the up channel here. Or again, we have this region, we have that region, okay, we have that resistant area. So this side it was resistant, now this side will become support. So you might see the price pushing downwards to these levels, through a week and come all the way to this demand area before now going in the upside direction. Okay, so these are the levels to be looking for buy entries. These are the levels to be looking for buy entries. So the reason why those in the Telegram group, we were selling EURUSD. We were selling EURUSD, anticipating it to reach, that is last week, anticipating it to reach these levels or these levels, so that we can look for potential buy entries. Remember, we buy at a discount. So we have to wait for the market come at these levels of discount so that we can be able to buy. Okay. So from the 1-hour time frame, basically the same thing. Okay, the same thing. So you can see all this is inefficiency. Okay, all imbalance. Okay, so the price has to fill this form of imbalances. It has to fill this form of imbalances. So again, it gives us maybe higher chances that the market might drop to these levels or these levels before we have the uptrend continuation. Okay, before we have the uptrend continuation. So that is Euro USD. Like I said, I'm more of bullish, but I want to wait for those retracements before taking the trade. Okay, before I take the trade. So let's look. Let me use another chart that I've not drawn so much. GBPUSD. So let us look at GBPUSD. This is GBPUSD from the monthly time frame. This is the monthly time frame. So from the monthly time frame, where we are at the moment, can basically say that I can basically personally, by looking at the price where it is at the moment, I am a bit neutral. I am a bit neutral with the GBPUSD. No specific direction as such, because it's in the middle. Okay, it's somewhere in the middle. But again, technically looking at it, That is from the monthly time frame. We have these areas of we have this area. Okay, we have this supply area that was retested, and the reason the market pushed downwards to come around this area here, and there was a rejection. Okay, we have another area here where the market reached, and there was that rejection. The reason the prices are pushing up, so there are higher chances that the price might push up to around this upper trend line. Okay, in the upper trend line. So in the monthly time frame, this is what we have in the monthly time frame. Okay, in the weekly time frame, this is what we have. So let me delete this so that you can be able to appreciate the price. So so from this time frame, we can say this was the previous high. Okay, this was the previous high that the market created before creating the low here, before creating this low. So we can say from the weekly time frame, there was the breaking structure, and the market has been trading around. It went up and then it came down to around these regions, okay, to around that region. And the reason why there was a retracement from that area, we had this zone around that point. So you can see the market touched here, and now it is retracing all the way up. So from the weekly time frame, our targets, long-term target will be this highs at this level, 1.3151. So that is the long-term target that we are looking at. Then from the daily time frame, basically from the daily time frame, you can see clearly this is channel. This is a channel. Again, this is a channel. So there was this breakout from the channel, and the price came back to retest. Okay, and from the retest area, we can see clearly this is a very key area of this side. It's resistant after the breakout. Now it becomes support. So you can see the market touched these areas of support. But I would love to see the market come all the way to this level, okay? I would love to see the market come all the way to these levels for me to take a buy. This would be a nice area for a buy. But if the market does not come all the way to this area and continues to go up, so the target basically will be the previous high around that 1.25. Then the next target on the upside will be around that level. Okay, will be around that level. We have an area of supply. Okay, so it was retested, but it's very critical in terms of setting our TP around 1.2589. And then after that, we target around 1.2747. Okay, we target 1.2747. And finally, we look at these levels. Okay, we look at this level. So this is an area of supply. That is a very fresh area of supply from the 4-hour, from the daily time frame. Okay, from the daily time frame, around 1.2900. Right. So on the 4-hour, what we have on the 4-hour, again the same target. So you can see the market respecting this up channel, the breakout, then the retest, this zone that we have identified here. And the reason why I was saying that the market, I would love the market to push down to these levels. I would love the market to push down to these levels so that we can take a buy now. It's because you can see there's a lot of imbalance here. There's a lot of imbalance here. And the reason why I would expect the price to reach these levels before now going all the way up. Again, at this level, we have these areas here. We have this area of resistant. This was resistant. It was broken out. It was resistant here. These levels, you can see. Let me mark clearly. We had levels of resistance, and there was the breakout. the reason why you might be expecting the market to come back to retest these areas, okay? And this level also we have a demand zone. We have a demand zone. You can see a demand zone at that area. Okay, you can see that demand zone. So this increases the odds of the price maybe trying to come down all the way to this level. And if it pushes up, then we might see again price reach this area. We have a supply zone. We might see the price reach here and then come down to these levels. Okay, so we might anticipate this kind of move. I'd anticipate that kind of move. So we expect the price to come to this level. Okay, so once it plays that, then it will be creating the M pattern. It's more of an M pattern, okay, or the double top, M pattern or the double top, so that it can come to these levels. And then now from here, we might be looking now to sell, this being our first target to buy from these levels. This area being our first target, 1.2375. Then we have the second target will be around these levels that I've marked. This level that I've marked here, that is the 1.250, and then 1.2589 in that manner. Okay, so ensure you mark and those areas so that you can see how the price plays out. Remember, we take what the price gives us. Okay, we take what the price gives us. So from the 1 hour time frame, okay, from the 1 hour time frame. So you can see basically here there was more of consolidation around this area. It's more of consolidation. So again, there are chances the price might reach all the way to these levels before now coming down. Okay, just like you have seen in the 4 hour time frame. So today I'll give a bonus analysis on Euro on GBPJPY. So for GBPJPY, this move was for Friday. We traded this move on Friday, and basically this was due to the news that we had on Friday. So for the GBP, so we had the retail sales for GBP on Friday. And you can see there was an increase, there was a decrease. Okay, there was actually an increase. So it was minus 1.1%, and it increased to minus 0.3%, meaning GBP became strong. And the reason why now we saw this sell in GBPJPY, because when GBP is stronger than JPY, when GBP is stronger than JPY, basically, there was a decrease in the core retail sales. Okay, there was a decrease in the core retail sales. So with the decrease, the reason why we saw this sell-off, but again, the market retraced on the upside after reaching this key area. This was a very key. It was a very key area of support. Okay, it was an area of support that was broken. Okay, you extend these levels. This was an area of support that was broken. And after it was broken, now we had the market reach these levels. Okay, we had the market reach these levels. And then now this becomes support. This level becomes support. So this side, it was resistant. Okay, this side, it was resistant. And now after the breakout, it became now support. And the reason why we were taking our buys from this region, okay? The reason why we were taking our buys from this region. And currently we're in this trade. It's up. Those that we traded on Friday, the Telegram channel, it's around 106.9, 106 pips. So this is a swing trade. I'll be looking for GBPJPY to reach. This will be my first target, and my second target, and my third target around that region. Okay, so basically, from this position, I am targeting the price to reach these levels. Okay, I'm targeting the price to reach these levels. To reach those levels. Okay, so my stop loss was around that region. And but of course, because it's already in profit, I have to adjust my stop loss, break even and take partials. Okay, break even and take partials, and let the market come all the way to these levels. Okay, that is a 3-1 risk reward ratio of 1:3. Okay, risk to reward ratio of 1:3. Okay, so fundamentally, this week we have the key news to expect here. We have on Tuesday the CAD CPI, we have the Canadian CPI. So you can see they are projecting month over month. The previous was negative 0.1, so they're expecting a decrease. Okay, they're expecting what we call an increase. I mean, they're expecting an increase to 0.2%. The median CPI year over year, they're expecting a decrease from 3.8%, 3.6%, and the trimmed CPI year over year, they're expecting a decrease as well. So on Wednesday, we have the unemployment claims for USD, which again, they're expecting a decrease. And then we have revised UIM consumer sentiments, they're expecting an increase. Then on Wednesday, we shall be having the PMI, that is PMI news for Euro and GBP as well. Okay, so then on Thursday, it's a bank holiday for USD and also for JPY. So this is not the best day to trade the gold or any pair that has USD. That is the major, because since it's bank holiday, I think this is Thanksgiving. Okay, it's Thanksgiving Day in America, so the banks will be closed, so the USD will have no volatility. So majors might seem to retrace for some time, but again, majors like GBPUSD, EURUSD, we might experience some volatility due to the fundamentals that we have on Thursday. Okay, then on Friday we have the flash service PMI and the flash manufacturing PMI for USD. Okay, so that's how the week is fundamentally. I'm not promising to trade live this news, but in case I get an opportunity, I might. But if I don't get an opportunity, then again, you follow the strategy that I've always taught you on how to trade news. Okay, I'll do another video probably this week to explain how we trade news, just because many people have been asking me to explain in details how I trade news. So I'm anticipating to do a video basically on how to trade fundamentals, so that you guys can be able to know and adjust and be able to take advantage of that volatility. So at this level, remember I said there was this downward movement, okay, because of the core retail sales, of the retail sales for GBP. But you can see here, the reason why it is sold, even though we had an increment, meaning that GBP might be stronger. But again, remember, we look at the projected. So the previous was minus 1.1%. The projected was 0.5%. And the actual was 0.3%. So if the actual is less than the expected, then we have the currency lose strength. Okay, so the reason why we had this downward movement due to the news on Friday, right? And now it reached to this area of support, and which gave us the up movement, okay, which gave us the upward movement, right? Also, we took a trade on Friday. We took this trade on EURJPY. We took this trade on EURJPY. So this was our entry. This was our entry level. And you can see the price is moving up. So our first target, my first target will be around this level. Okay, this level. Then my second target will be around that level. And my third target will be at that level. So this does not mean, when I'm giving this target, does not mean that you jump in where the market is at the moment. Remember, I took the trade all the way from this area of support. okay, all the way from this area of support around that level. That's where I took the trade from at here. And basically this is a 1.8, there was a 1.8, 1.8, 1:8 risk to reward ratio, 1:8 risk to reward ratio. So I already took partials because of this region here. I already took partials because of this. It's a very critical region. So and my stop loss is at break even. So I'll keep monitoring the price as it comes all the way to these levels. This is where I'm planning to take my profits. Okay. So that said, I will stop at that. We have given you an extra for GBP JPY and Euro JPY. So in case of retracements on Euro JPY, maybe you can look to take the trades. You look for buys in the retracements. Even for GBP JPY, you can look for buy entries in the retracements. But again, remember we have the fundamentals. We have the fundamentals. This week we have fundamentals. This week for GBP, that is on Thursday. We have fundamentals on Thursday. Okay, so it's good not to jump in a moving bus. This is a bus that already left. So it's good to wait for another high probability setup or a high potential area for you maybe to buy. Okay, so if you want to swing all the way to these levels, because for GBP, JPY, this is a swing trade. Actually, swing trading is my strategy. I love swing trading, and that's what gives me peace of mind instead of scalping. Okay, so that being said, ensure as you watch the video you mark these areas, all the areas we've discussed about for dollar index, gold, Euro USD, and GBP USD. Ensure that you mark those areas so that you can be able to know when the price reaches those areas, so that you can be able to take positions. Okay, remember, I always say a smart trader is a trader who marks the points of interest, and then you wait for the price to trigger those points of interest before taking a position. Basically, it means that we don't chase the price, but we wait for the price to reach to a point of interest so that we can take the trades. That's it from me today. And all I can say is that I wish you all the best in this trading week. May it be a blue week for you, and may it be a week that you'll be able to learn 1 or 2, 3 things in terms of improving your Forex education. Remember, I've been sharing also trading strategies in my YouTube channel. So it's good as well to revisit those strategies. You learn them, you practice them in demo. You never know, maybe 1 or 2 strategies might benefit you there, and it becomes the strategy that changes your game. Also, if you have benefited from my YouTube channel, the videos that I post, ensure that you like, you subscribe, and also you share to your friends as well, so that they can benefit. Okay, so that they can benefit. So thank you so much, and I wish you a blue week ahead.